everyone. It's October and it's hot. Oh my God, I cannot believe that it's October already, but you know what? We're having fun here in the studio, talking to everybody about what they do, right through the radio to everybody out there. We're live on Facebook, so I do want to say hi to everybody out there. Like us and follow us. We will share the show later on. My first guest, actually, he's been on with me a couple of times, but the company that he is representing has been with me now for quite some time. I have with me now Brian Mythaler, and he is with Bergen Financial. Welcome back to the show. I want you, first off, to tell everybody a little bit about Bergen Financial, but then what you're going to talk about today.
Yeah, so it's great being back. So we're going to talk today about IRMA. But before we do that, I will talk to you a little bit about Bergen Financial.
I've been talking about IRMA for a long time.
That's funny because most people don't know what IRMA is right now, right? That's why it's a big topic. But Bergen Financial Group, we're a financial planning company. We focus in on making sure that we facilitate your financial security by really make sure we got a solid plan for all 5 of the financial pillars.
Right.
So a lot of people just focus in on your stocks and bonds, rate of return. Those are important, but we also want to make sure you have a solid income plan. We also have a tax strategy because taxes hit all the different pillars. We also want to do estate planning, make sure you got a good estate plan in place as well. And then also too, it's important to make sure that what we're going to talk about today is make sure that we have a health care, long-term care policies in place too.
Super, super, super important. With everything that you're talking about right now, especially for being already almost the end of the year, tax planning also is very important because people don't think about that until April. Right?
Yeah.
It's really now to start thinking about what can I do, right, to make sure that I don't pay a lot of taxes. So that's something that they also help with. Let's talk about what you want to talk about today.
So we're going to talk about IRMA, which is basically, it's called an income-related monthly adjustment amount. And it is the government calls it a surcharge. And we like to say that fancy word is actually a tax. So based on your income will determine how much you pay for your Medicare Part B and Part D premiums. So IRMA impacts people that make over a certain threshold and they actually end up paying more for their Medicare Part B and Part D benefits.
I want to talk about that because, it's senior season coming up like within the next week or right now, I guess. Does this impact people right now for, depending on what their income is as to what they're going to pay going for the new season?
It does actually. So IRMA is actually based on a 2-year look back. So it's really, if you think about it, it's going to be your last year's tax return. So based on your last year's tax return, you already either triggered IRMA or you did not.
Okay, so how would they know?
So they'll get a letter from the IRS and letting them know that they're going to have an IRMA premium.
So here's the first thing I hear out of that. Open up the mail.
Open up the mail, yes, you will get a letter.
Right? Because most people, when they get a letter from the IRS, do they open it up?
I hope they do, but maybe not.
Right, but you have to, because right now you might be in that category, right? Or can you do a consultation with them? What happens, let's say they are, what do you do?
Yeah, so that's part of what we do too, is we can actually go in and really do a very detailed analysis to see, are you going to get impacted by IRMA, or are you already impacted by IRMA? But more importantly, what about the future? So IRMA may sneak up on some people too, and then it might be too late, or you might have to make some things very drastic to get rid of IRMA. So the nice thing is IRMA's triggered. It's triggered for a year, and you actually can get out of IRMA if you're in it.
Wow. But you really want to try and get rid of IRMA the soonest the better, right?
Yeah. So for example, everybody pays when they sign up. When you're 65, you have to sign up for Medicare Part B, unless you're still covered under a qualified medical plan right through an employer or your spouse. But everybody has to sign up for Medicare Part B, and there's a premium associated with that. It starts off about $175 roughly, and then if IRMA is triggered, that can go all the way up to $500 a month per individual. So if you're married, that could be an extra $1,000 on your Medicare Part B premiums.
So have a conversation with you.
Have a conversation, have it early, because we can actually help you take the steps appropriate so that we don't have to worry about IRMA today or in the future.
The number to call is 602-652-2665. The website is retirewithdarcy.com. Very important. I'm so glad you're talking about it, especially right now. You know, again, I think that the scariest thing is that people may not know about this. What I love about my show the most is that they can hear where else but on Networking Arizona about something like this, right?
Yep. Yeah. A lot of people are not talking about IRMA. They don't understand IRMA. So that's why we want to basically get in front of this and make sure that we're helping people out there, helping our clients understand IRMA and the steps they can take to avoid that.
How do they know what the income, what is involved with that?
So the nice thing is, well, I guess not so nice is IRMA, as far as what impacts your income, it's easier to talk about what doesn't impact.
What doesn't?
What doesn't from an income standpoint. So life insurance, cash value, that will not impact IRMA premiums. Roth accounts will not impact IRMA premiums. Health savings accounts, those don't impact it. Your equity in your home up to the limits, the 250 or 500, those will not impact it as well.
Okay.
Outside of that, pretty much if you have capital gains, dividends, if you have tax-free bonds that everybody thinks are tax-free, those definitely still trigger Social Security taxation, and they can still trigger IRMA, so they're not truly tax-free. And then obviously income, rental property income, passive income. If you have businesses and you have passive income, that's also going to trigger it too as well. If you take out of your IRA or 401k, that will trigger it, that counts. Anything from your required minimum distributions, those also get added in, plus part of your Social Security.
I'll tell you something, to me, it sounds like for the first thing I would want to do is have that conversation with you. Because so many people that, listen to us have a lot of those things that could affect it. And the only way you're going to know really is to sit down with someone like you. Is that
Yep,
correct?
That's correct.
Again, that phone number to call him direct is 602-652-2665. The website is retirewithdarcy.com. We have a couple of minutes. What would be something that you want to leave with them before we go to a break?
I think you touched upon it. It's super important to spend a little bit of time today to really understand, will you be impacted by IRMA today, maybe down the road? If so, what are the steps we can take? So there's lots of steps we can take to keep you out of IRMA. If you already have the letter that you're in IRMA, then we want to take the appropriate steps to make sure next year you're not also going to be paying that IRMA premium.
Well, first of all, if you're in IRMA, I'm sorry, right? But again, I think the main thing is that when you hear something like this, what you like to do with these, like what you call they're a little bit of a financial checkup. Mm-hmm. And then this just kind of fits right in. You like to do a little 15-minute call for people, and you can find out, well, where do I stand? That's the first thing to find out. And I know that you guys, what is really great about Darcy's firm is that you're all really laid back. It's not like you come in there, it's major. It's like you like to have this little easy conversation, find out where do I stand, and then we can go from there, right?
Yep, absolutely.
Again, that phone number to call is 602-652-2665. This is super important. You may or may not be part of this. You already might be, and if you are, let's find out what you can do for next time. But if you don't know, you better find out, because now you can find out right now. You have the time to find out, what can I do to protect myself? Again, that phone number to call is 602-652-2665. Check them out on their website. It's retirewithdarcy.com, and get that consultation, the free consultation, and find out how they can help. Hang tight. We're going to be back in just a minute. We're still live in the room. So if you want to go out of the room, you can. Or if you want to hang tight, you can hang tight. Are you okay?
Yeah, can I text somebody out there, or can I text somebody right here?
You can do it out there.
That's right.
Yeah.
Right back in.
And if you come in, just make sure your phone is on off or silent. That's all. We're still live in the room,
Okay.
So I just want to find out, how many people are caught by this?
Well, so as with any surcharge or tax, it's going to impact a little bit less people today, but more people are going to get caught in it down the road. Okay, I mean, if you think about, for example, the tax system when it came out, it was designed to capture 1 to 3% of the population. Now it captures what, about 60%?
I'll give you a rap, but I'm still always gonna count you down.
I was still a little
No
late.
worries, it happens. But yeah, if I just a rap, and then I'm still always gonna count you out. So
Okay. He might want to come. Go ahead.
Yeah, and then
again, sorry.
Yep. Your alternative minimum tax, right? That was designed to capture 215 high, income people that they were paying their fair share. Well, now that captures hundreds of thousands of people. So IRMA is designed, it will capture quite a few people. There's income thresholds you have to exceed. So once an individual exceeds about $103,000 in income, a couple, $206,000, that's going to trigger IRMA. There's different brackets, and then it starts going up as far as your premium.
Has IRMA been around for a long time, or is it relatively new?
It's been around for quite a while. It's just that now it's starting to come into play where you're seeing it more and people are being impacted by it more.
It's because people are making money?
Well, no one's really they're kind of losing money on there. It's part of it.
I meant their income.
Yeah, because they're actually making higher incomes right now.
Exactly.
And they have larger 401ks or IRAs that they're having to take out the required minimum distributions, and those can all help trigger the IRMA taxation.
Well, whatever way they can, right?
That's right.
Is there something that I'm missing, or that that I'm on target, or how
No, that's
are
good.
we? I think we should talk again about the income. You know what counts
90
towards
seconds,
the
yes.
Yeah, because we can talk about the income because, they've actually moved out the required minimum distribution age. It started at 70 and a half, and it went to 72, 73, and it's going to go to 75, and everybody says, well, that's a great thing, right? Well, not really. What that means is your retirement account has more years to grow. You're older, so when you do take out your RMD, you have to take out a larger percentage. Why is that important? Because that's going to potentially now trigger my Social Security to be taxed. And it could also trigger IRMA taxation.
It's crazy.
It is.
Y'all have any questions? Are you okay?
Perfect.
Here we go. Ready? So welcome back, everyone. We're talking with Brian Thaler, if I say it correctly, and he's with Bergen Financial Group. And we're talking a little bit about something called IRMA. And for everybody that might be just tuning in, please tell them a little bit what this is. And what I want to do is kind of narrow and deep on the income that's going to involve with people that it could affect them. Go ahead.
Yeah, so IRMA is acronym for Income Related Monthly Adjustment Amount, which is basically the IRS charging you a surcharge based on your income levels for your Medicare Parts B and Parts D. So it's an extra fee that you pay on top of your normal Medicare fees.
Okay, now we want to talk about the income and what parts some of the things that can affect it. Which ones are? I want them to hear that because it's quite a bit.
Yeah, it's most of assets that people have today are part of going to be taken into account from an IRMA standpoint from an income. So, for example, that's going to be any capital gains you have, any dividends, anything you generate a 1099 for, so interest from a bank account, CDs, those are all going to count. Distributions from your 401k or IRA that you take out, that also counts. Part of your Social Security will be factored into that equation too as well. Any earned income you have, any passive income that you have, any tax-free bond income that you have will also be factored in there. Any required minimum distributions you take out are also counted in there. So pretty much most everything, there's a few exceptions, but most things that people have is counted towards the IRMA income.
Right, which makes your income higher.
Yeah, it basically, if you look at your tax return, anything on line 2A and 11, that is what is being impacted from IRMA.
Right, and what happens is now you're going to have to pay quite a bit when it comes to your Medicare. It's not just, you think it's $170-something, but now it depending on your situation, and everybody's different, right?
Yep.
So you have to have a consultation with you. You do a free 15-minute, I know you like to do a, well, you call it a financial checkup, but we can call it an IRMA checkup, whatever you want to do. But we can, you'll talk to them a little bit about it, find out where they stand, and then what are some of the things that you can do to protect them from getting affected by it?
Yeah, I'm actually, so you're not hearing a lot about IRMA right now, and that's because a lot of your financial advisors, they focus in on the stocks and bonds rate of return. If you need tax advice, they'll send you to a CPA. We look at a comprehensive financial planning process. So I am actually a IRMA certified planner. So I actually have a designation and understand how IRMA is impacted. If you have an IRMA letter, there could potentially be some ways that you might be able to get out of IRMA if you've received a letter from the IRS. So if you received a letter from the IRS, please come talk to us, because there might be some things that we can do. And then there's a whole process you have to follow if you do get the letter. And there's certain time frames that you need to adhere by. So if you get that letter, please come see us. It's very important so that you're not paying too much.
That phone number to call is 602-652-2665. The website is Bergen Financial. We're going to do this one. We're going to do the retirewithdarcy.com. I do also want to ask you, when you say that you're a certified IRMA planner, okay, are there a lot of them out there? Never even heard of it.
There's not a lot of us out there right now.
Right,
So it's designations. It's authorized through the SEC. So there's not a lot of us out there. I'm also a certified financial planner. There's not a high number of us out there as well.
Mm-hmm.
But just by having that designation, you have to go through training so you understand more than just some of the pieces. You understand how everything fits together and the steps you can take to protect yourself.
So let's talk about being protected. Okay, somebody calls you up and you find that they might need to do something. What are some of the things you do? For instance, especially you said that you have to do things within a certain time frame. It sounds scary in a sense. You got to be on top of things.
Well, it is, because your Medicare premiums, your Part B, comes directly out of your Social Security.
Mm-hmm.
So, that's something that we want to factor in and look at and make sure that we're not paying too much. A lot of people come and think Congress or the government is not that smart with what they do. They're extremely smart. They're extremely intelligent. They know what they're doing, and they're not 3 steps ahead of us. They're 20 steps ahead of us.
Really?
You figure they've increased the required minimum distribution age from 70.5 to 72, 73. It's going to go to 75. Everybody looks at that and says, well, that's great. It is, but now your accounts are bigger. You have to take out a larger portion, and by doing so, you could trigger IRMA. You could also trigger your Social Security being taxed. So they're really smart. There's another thing in this provision why it's super important that you don't want to get that IRMA surcharge. There's a rule for Social Security called hold harmless rule. What the hold harmless rule says is that your Social Security can't be reduced because your Medicare premiums increased. So for example, let's say you make $1,500 a month in Social Security benefits and you're paying your Medicare Part B, and the premiums go up. They're not going to reduce your Social Security benefits to cover that. The government will eat that extra cost.
Okay.
However, you get a COLA, cost of living adjustment, from your Social Security, which is averaging about 2.4%. Medicare is going up by about 6%. So your Social Security may not go down, but you may never get an increase because your COLA is going to be eaten up by the extra fee.
They are smart.
They are very smart. Now, if you trigger IRMA, hold harmless rule goes away. So now your Social Security can be reduced. I've actually ran modeling where at the end of every month you have to write the government a check to cover your Medicare Part B premiums because they eat up your Social Security benefits.
Mm.
So it's super important that you understand and you just have a good view. Will I be impacted by this?
And the only way you're going to know is, well, he's a certified IRMA planner.
Yep.
And if I'm going to speak to somebody, I want to talk to somebody who's certified in that, especially that you're also a certified financial planner as well. And helping people understand this, it's not here, you're not here to scare anybody, but to be aware. I think this is so important. And again, what I love about my show the most is that the information that people get here, it might be you, it might be someone that you know. Did you hear about this? Tell them about it. That's what it's all about. That's what networking is all about. And make sure you have that consultation with them and find out, where do I stand? That's the most important thing. And if you can do it early enough, You can make sure that you do it on time, right, from what I'm hearing from you, yeah?
Yes,
And then, of course, making sure that it doesn't happen in the future, right?
correct.
Right, and that's the big thing.
That's the big thing, because it could sneak up on people where they're fine today, but down the road, 5, 10 years down the road, now all of a sudden they're in the IRMA surcharge trap.
Again, you don't know until you find out. And the phone number to call them is 602-652-2665. Check them out on the website. It's retirewithdarcy.com. We have some time. What do you find happens most of the time when you talk to people?
When we talk to people, a lot of times people are unaware of some implications from IRMA. They're unaware maybe of some tax consequences of how they're taking money out of their investment accounts.
I have to ask you, let's say somebody doesn't know anything about it, and all of a sudden they get their Social Security is much lower because they've taken it out now. Is it too late? Is there any reversing that can be done?
No, once you take your Social Security, it's pretty much locked in. So we also will help you optimize your Social Security benefits, when to take Social Security. Is it better to take it at 62, full retirement age, push it to 70? We can help with that. We can also help you do some risk assessments with your portfolios. I had a client recently come in, and she was very conservative. However, their portfolio was very aggressive. So we really helped them understand that. And then also some strategies to help minimize taxes today and also in the future. A big thing is Roth conversions, super popular. We have some great tools that can really outlay a great plan. And that would be one way to help you stay out of IRMA too as well, by taking advantage of Roth conversions today. They pay dividends down the road.
Well, right now is a great time to be doing some, what I called tax planning earlier, right?
Yeah.
But this is more so than that. This is a really almost Medicare planning as well.
Yes.
And knowing that you are covered and making sure that you don't get yourself into a pickle, is if you want to call that in a way, that could really be detrimental down the line, and you don't want to have to do that. So have that little, they call it a 15-minute checkup, where they'll just talk to you and find out a little bit about where you're at and find out how they can help you. I think that also talking to you about when should I take that Social Security, that's huge, right? And what you can do to help them, of course, not get into these tax situations. That's what it's all about.
That's what it's
What are your
about.
final words, real quickly?
Final words, make sure that you have a good plan in place. Come see us. We'll help you and give you the guidance you need.
That number to call again at 602-652-2665. Definitely have that consultation with him. That's what it's all about. And if it's not you or someone that you know, please tell them about this. This is hugely important, guys. It can affect you pretty hard. So again, that's 602-652-2665.